You might be thinking, where's the best place to invest? Because every place seems to be great and every place seems to be not too great. So I've done all the research and the hard work for you in this video where I share with you the 5 best places I think you should be investing and you should be thinking about investing. So watch the video and share your comments with me at the end in terms of what you've liked. Top areas for investing in property. Trying to find the right area to invest in where you're kind of starting off can be quite daunting and difficult because it's new to you. And although it's kind of simpler and to some extent easier to invest in properties close to home where you live, you know the area well, you know the investors there, you've got people, contractors and other contacts, and that can be very tempting, and going further afield can be difficult. Now, while the UK property market on a general right now is on an upward trend, certain cities and towns are expanding more quickly than others, and you'd kind of expect that, wouldn't you? And I'm sure, as you've heard before, when it comes down to investing, it's all about location, location, location. Now, from a regional perspective, according to Savills, house prices in the northwest and Yorkshire and the Humber region are expected to grow around about 18.8% by 2026. Now that's fantastic growth, by the way. And with the government's investment agenda, whether you agree with it or whether you don't, it's a totally different story. I won't go down that path today. But the north-south divide in house prices look set to kind of close over the next 5 years. And looking to cities in the north, you could deliver better opportunities or gain better opportunities and deliver better returns for yourself and your investors. Now, Manchester is one of the top destinations for young professionals in the northwest for very obvious reasons. Big city, big lot of opportunity, good universities, good nightlife, etc. And in theory, such a demographic should lend itself to highly performing rental markets, as young people are unlikely to have capital, generally speaking, to move out of the rental market to get onto the housing ladder, at least at the beginning of their careers when they're obviously starting as graduates or just starting a new job. And in this case, theory appears to be reflecting what the reality is. According to Select Property, Manchester outperforms the national average for rental yields. So this is a place you should be looking at very carefully. And in March 2020, it was predicted that Manchester would have the highest rental growth in the UK over the next 5 years. Remember, March 2020 was when COVID and lockdown started in the UK. Now, Manchester could therefore be an attractive location for buy-to-let landlords, and it is, and I think you ought to look at it in detail. Additionally, Manchester should, in theory, become an even more attractive place to live in the future thanks to the government's levelling up agenda. Again, how good that is, I'm not going to comment, but I'll leave you to draw your own conclusions. According to the Manchester Evening News, 6 projects in Manchester were allocated a share of 4.8 billion from the Chancellor in the 2021 autumn statement or autumn budget. Projects such as markets, town hall refurbishments, and bridges to connect student campuses to business areas are all due to receive significant pots of money from central government. Now, attracting people who live in a city environment will obviously drive up rental demand because more people want to be living in those urban areas, and therefore that makes it a sound property investment, I think. Manchester is also a sound investment for businesses with up to 40% lower operating costs compared to London, and the largest regional economy outside of London. It makes good sense to set up shop there, I think, because there's huge opportunity and there's a huge demographic that you can target. The city centre project alone was assigned 20 million from the 4.8 billion allocated levelling up fund in the north in the 2021 autumn budget. This money is to be used to build up on the existing culture and create space for small businesses and also for startups. With this expected growth for businesses and for commercial property residential property and other businesses. It's an attractive investment demographic area, region that you should be looking at. So keep an eye on Manchester and do your research. And number 2, Newcastle has one of the best graduate retention rates in the country and is recognised as one of the fastest growing cities for startup businesses. So there is a prime market for tenants, and it's something again you should be looking at. Its football club, which I won't talk too much about, by the way, but it recently was bought out by incredibly wealthy owners, and their investment could bring in tourism, new residents, and new opportunities. But I will leave it there because I'm not a football specialist. Additionally, the Northeast is home to several tech hubs, which are estimated to be worth 1.1 billion. So the tech industry is pretty booming in that area. And the percentage of privately rented property in Newcastle has doubled over the last 12 years. So it's a proven market. Residential property prices in Newcastle are generally below the national average, so they're more affordable. A large number of property developers believe that the Northeast is the UK's most opportunity-rich region, and I can see why. Commercial property in Newcastle is approximately 30% cheaper than anywhere in the UK, and I think you should make commercial property part of your wider portfolio and investment strategy. Therefore, it could be very attractive as an option for investors who prefer commercial property, especially if you're looking at commercial conversions. And I've got loads of videos on this channel here for you to look at commercial conversions, by the way, because it's one of my favourite strategies. Additionally, Newcastle is a popular destination for a weekend city break, so service accommodation, again, is a very viable option because it's a thriving city. Number 3, Nottingham has 2 popular and good universities, especially Nottingham University, and like Manchester, has a thriving student population. It has the fastest growing economy in the East Midlands, according to Residential Estates. 39,000 new jobs are due to be created in Nottingham by 2030. That is significant growth. And if you, like me, you drive up and down the country, then you'll know that the M1 runs right beside the city, which makes much of the country within a short drive and is within a close distance of 2 airports. It also is only an hour and a half away from London by train and connected to most major cities through the rail network. Such attributes make Nottingham a very attractive place to live in, and it's got many other amenities which are of interest to most people. Nottingham is within the remit of D2N2, the local enterprise partnership for Derbyshire and Nottinghamshire. Its strategic plan Vision 2030 aims to generate up to 9 billion of added value to the local economy. That's significant for a place the size of Nottingham. Now, to do this, substantial resources are being allocated to business support programs and vocational skilled development in the city, and I think that's incredibly important, especially for younger generations, creates more opportunity. And the funding is also being used to upgrade Nottingham's physical infrastructure, because obviously infrastructure is important to growth, and to improve facilities and bring in tourism, and obviously also to attract inward investment from corporates and other businesses. For property investors, people like you and me, the picture is as good as it gets, in my opinion. In 2019, Nottingham had the greatest growth in house prices of any UK city, 5.2%. The private rented sector of the housing market in Nottingham now makes up 26%, according to the Office for National Statistics 2019. Recently, the majority of new developments in Nottingham have been for student market and student accommodation. Surprise, surprise there. And therefore, there is a shortage of housing for young professionals and other demographics. So make sure you keep an eye on Nottingham. This undersupply means that rents can continue to rise, and thus will likely be a good return on investment. And obviously there's huge demand, so that means more properties are going to be taken up. Next, we have Bristol. Aldermore named Bristol as its top city for property investors in its 2021 city tracker. It is an hour and a half away from London, and you'll know, if you know about Bristol, that quite a few people commute in and out of London on a regular basis. It's got direct links with the M4 and the M5, and it connects well to the Midlands and the Northwest. It's home to 2 universities, and Bristol University obviously is one of the best universities in the country, or a very good university at least anyway, and boasts a good retention for keeping their student graduates in the city. It was named Europe's most trendiest city by National Geographic, and it's a good place to go. By the way, I've been there quite a few times, and it's very attractive for different ages, especially for young people. Bristol was also named the 3rd strongest economy in the UK in April 2021 by This Is Money. The study cited in the article, and it concluded that Bristol was one of the best placed cities in the UK to cope with challenges faced in the post-recovery from the pandemic. It also maintains a high level of employment rate, and I'm not surprised by that because they get a lot of investment and the city is built for growth. And the average house price in Bristol is due to exceed the national average, which may be off-putting to many potential landlords, but they have constantly grown over the last decade, and it continues to grow. However, perhaps as an impact of this, rental property in Bristol is some of the most demand in the entire country. Only 0.6% of its housing stock was left vacant over the last 12 months. That's pretty low, by the way. Therefore, if you are concerned about house prices, it may be worthwhile investing in commercial conversions. Maybe even do 2 or 3. Why not? It's a good strategy, and I highly recommend it. Number 5, we have Glasgow, because we want to make sure we represent different places up and down the country. And Glasgow has great public transport links, so the city is easy to find your way around. Glasgow has a thriving arts sector with incredibly popular music and theatre venues, and it's a good thriving place and a nice place to visit. By the way, if you haven't been there, check it out. The city hosts 3 universities with 65,000 students attending, and most of which are making the city their home post-graduation, at least during term time, but obviously the people tend to stay there as well. Glasgow is a much larger city than Edinburgh, so there are more opportunities for property investing. It was rated as one of the top 10 world tourist destinations by Lonely Planet. It's a good place to go. Its football stadium, Hampden Park, was chosen as one of the venues for Euro 2020, bringing in tens of thousands of tourists to the city. Therefore, serviced accommodation at that time and going forward, I think is a real opportunity and a fantastic income generator. It's also been named as one of the best cities for millennials and young people to live in and work in. Now, house prices are starting to rise significantly in Glasgow, and you won't be surprised because obviously there's huge demand, but they remain below the UK average for now. So get in there early if you can, and I think it's worthwhile investing in Glasgow because that way you can obviously benefit from both capital appreciation and obviously all the income that it generates too. Rents in Glasgow have risen by 38% over the last 9 years. That's significant. It on average takes around about a month from putting a property on the rental market to finding a tenant, which is pretty good going. So Glasgow, if you're interested up north, is a good place to look at, and I think you should visit it, at least if you haven't been there. And if you have been there, check out the property prices and the market to see what works for you. So I suggest you look at the different areas, look at the 5 I've suggested, look at which ones give you the best return, which ones give you a good feel, which ones offer you capital growth, which one also gives you that warm, cozy feeling where you think your investment's going to be safe, you'll have a fantastic return on investment, a place you don't mind visiting yourself, somewhere where you could possibly live or where your demographic and your target market would enjoy living, and then obviously crunch the numbers, and no one place is going to be exactly what you're looking for, but then you could invest in 2 different areas because they might have unique things about both of them, so you might like to invest, for example, in Bristol, and then also decide to invest up north in Newcastle, and there's nothing wrong with that as long as you have a very clear strategy in terms of what you're looking to achieve or what kind of demographic that you're targeting. Also think about the kind of type of landlord you want to be. You want to work with young people, you want to work with professionals, you want to work with the aging population, and take all those things into account, and then think about which particular area works for you, which particular strategy works for you, and obviously look at the ones that give you the best return. And I think it's good to look at different places, good to look at different strategies, and then decide, because ultimately it depends on the type of landlord you want to see yourself being, or where you want to be. Now, if you're comfortable and you trust another company to deal with the day-to-day running of your management of your property business, I think that's fantastic. Do that, because that means you can focus on the things you're really good at and grow your business quicker. If you're the type of person who wants to manage yourself and save a bit of cash, again, that's down to you, but that's going to slow you down to some extent. So you make that choice. I keep it all hands off, give it to other people to run, so I can focus on the things that I'm really good at doing, the things that I enjoy doing, because that then gives me more satisfaction, more enjoyment. I wake up every day and thinking I want to go to work because I'm doing the stuff that I enjoy. If I start doing things that I don't enjoy and they're boring, and I've got to obviously have a sense of responsibility, take them seriously, but I don't enjoy doing them, I'm not going to do a good job. And that's why I always make sure I, number one, invest within a 60-mile radius of Peterborough, usually 40 miles, because then I can drive there. I always make sure I buy property that interests me and excites me, both in terms of adding value, return on income, capital growth, but also where the property has something about it. Generally speaking, I end up buying grade 2 listed buildings because they have good challenges, but also you can make the properties look fantastic and really nice, and that creates more demand because people want to live in those type of properties. I don't want to be travelling 2 hours up and down the motorway or on a train or by other means. But that's because I'm clear on my ideal type of tenant, my ideal buyers if I'm selling, and I'm also clear on the type of ideal type of property to some extent, although it's never ideal because it's pre-built, so I've just got to go with what's available. So I'm clear on that. I'm then clear on the future growth of that particular area, look at the infrastructure, the transport links, all these things are important, local schools, the nighttime economy, because obviously that's important, the overall friendliness of the area, is it family friendly, is it student friendly, what type of people want to live there. So those things are important. Also open green spaces, because I think more and more after COVID, people appreciate open space. So I look at that too. And I think you should obviously have your own criteria for the type of area you want to look at, the type of property, the type of demographic, and obviously the wider amenities, because that's what most people, most tenants, families look out for, and what's important to them. It's not about what you want and what I want, it's about what our tenants or our customers want, call them what you like, and then obviously making sure we provide for what they want. And I think it's important having your ideal tenants' needs in your mind for when you're looking at property, because then you can see things from their perspective. You can narrow down on the properties which fit, the properties that don't fit, and you can then obviously start to let your deal sources, your agents know the type of properties you want, so they only send you those deals in a particular price range, so it stops you wasting time looking at every single property on the market in a particular point. Because I think there's no point in doing that, looking at all different deals, because that's just going to consume you. You can spend a whole day, week, month, 3 months, 6 months, a whole year just looking at loads of different property deals and then have fatigue of analysing so many deals. I'd rather say have a criteria and kind of stick to that particular criteria. Then you know what works for you, what doesn't work for you. You become familiar with those particular type of deals. You become familiar with the returns. You become familiar with how much it costs you to refurb, redevelop, and then the refinancing also becomes easier because there are certain lenders who like to lend on certain types of properties, certain size of properties, certain areas, certain type of tenants, demographic. All of those things become easier and simpler. And at the end, of course, you're there to make sure that you give a fantastic property to your tenants who live in it long term, and who enjoy that property, because that's what we're about. I mean, people think property investors are money grabbing people. I know from experience we're not. We want to provide nice properties to people who want to rent them out. Of course, if they then go on to buy their own properties, that's absolutely fine. But if they want to stay in our properties, that's what they are there for. But do bear in mind that obviously since COVID, that construction work has felt the pinch. It takes longer and it's costing a lot more money. So bear that in mind. So if you haven't done the numbers recently, make sure you check out the prices of buying materials and also the prices of labor and the lead times, because a lot of people right now are overspending, because the figures that they worked out when they bought the properties are very different to what they're having to spend now on the refurb work. So make sure you kind of get that as right as possible. If you're not experienced, speak to a quantity surveyor. They'll obviously be looking at deals all the time, and they'll be able to give you some real good advice on what works and what doesn't work. Also, obviously, speak to your local agents for both in terms of what's happening in the property market right now, and also if you're looking to sell your properties, what they think you can sell the property for. And do remember that choosing to invest in a property that there is a lot of demand for may mean that you have to compete with other investors for the deal. But I can tell you the best property deals that I've done, I've usually overpaid for them and paid more for them because there's been more demand for that property. But over the long run, those properties have served me well. There's been huge demand. They've always rented out. There's been capital growth. The return on investment's been good. So don't just think you want to nab deals or get the best deals possible and kind of beat people on price. Sometimes, overpaying for a property in a good area with huge demand isn't a bad thing, by the way. And that might be contrary to what other people are telling you. I'm just sharing with you my experience. Now, it's also important, I feel, to know the law of the land. A lot of local housing laws and regulations are managed by local councils and local authorities rather than central government. Therefore, these can differ from area to area. So if you're focusing on two different areas, make sure you're familiar with those rules. It would be very frustrating to have found an ideal property and then bought it only to find out that you can't do what you wanted to do with it from the outset because of local restrictions. So, for example, in Nottingham, there's an Article 4 direction which removes the right to carry out certain types of permitted development, and then you've got challenges with setting up HMOs, and you need to apply for planning before you set up an HMO. Now, if you don't know that and you've bought a property and you're going to set up an HMO, you find out about Article 4, that might mean it makes it difficult for you. You might go through the planning process, you might not obtain planning, and it's just going to frustrate you and the entire process and your business plan. And therefore, it's essential, absolutely essential, that you do your homework before. You know what the rules are, what the regulations are, what the local authority is looking for. And as the city councillor, I would say to you, work with the local authority. Councils want to work with landlords and good, responsible landlords. And if there's a requirement for housing, they will point you in the right direction because they have an obligation, obviously, to make sure everybody's housed. So if there's some certain demand or certain things you can do to help them, they'll obviously help you in return in terms of pointing you out in the right direction. I'm not talking about anything that is untoward here. I'm talking about just having a grown-up conversation about saying to them, where is their demand? Where can I build property or extend, refurbish, redevelop, and then work with you. Additionally, remember that regulations can also change. So it's up to you or if you have a planning consultant to make sure they keep up to date and they keep you up to date because that's very important. But finally, make sure you visit the place. You look around there because looking online is great, but being in a place, feeling it, seeing it, talking to people, checking out the vibe, soaking in the environment, the atmosphere, is going to give you a very different impression to looking at brochures, to looking at photos, to looking at online reviews, and to looking at information on websites or on social media. And I think nothing beats the fact that you go out there, you talk to people, you look at what's going on, and observing and learning through being there, I think has a very different feel to it. and it's going to give you a lot of information. I know that takes time and it takes effort, especially if it's far away from where you live. But the good thing is, if you've done that journey once and you find out you're living in, let's say, in Leicester, and you're traveling to Newcastle as a one-off, and you realize, I don't want to do this journey regularly, but then maybe investing in Leicester isn't for you, and maybe you should invest locally in Leicestershire or Northamptonshire or Nottinghamshire or somewhere in the Midlands. So there's pros and cons for investing in different areas, but visit the place so you're very comfortable with exactly what's going on. And also look at the council's growth plans and other investment plans. Look at what funding's coming in. If they have a metro mayor, for example, through a devolved authorities, look at what funding they've got, what plans they've got. Most of this stuff, by the way, is in the local media. It's available. But if you approach the council or the metro mayor's office, or you look at stats or write to the MP for that local area, they'll give you all this information anyway. So you don't have to kind of hunt around for it. It's all available there for you to get hold of. You just got to make that first step and the effort to find what you're looking for. So you got to know what you're looking for. And when you're obviously out there, then make notes for yourself to remind you about the area, what works well, what doesn't work well, which parts of the city do you like, which streets do you like, because when you come back, you'll probably forget half the stuff that you saw. But if you've made notes, then you can obviously refer to them. If you've got your criteria, you can tick things off, okay, and see how much of your criteria is met in a particular area, and then compare that to 2, 3, 4 different cities or areas, and then compare and contrast. So you're doing something which is a bit more methodical, as opposed to gut feel and going by how you feel about something. I think having a checklist and a process is important. And ultimately, it depends on whether you are comfortable, like I said, traveling up and down the country or staying in one particular area. Personally, like I said, I only invest in a 60-mile radius, ideally 40-mile radius from Peterborough. 60-minute drive or less is better. I like to be hands-off in terms of in investing in properties, hands-on when it comes to refurbishing them. That's what I enjoy doing, and it works well for me. You need to find out what works well for you and do it. And sometimes it just means trying different things, and then you'll find out what you like, what you don't like. But what I can tell you is there's fantastic opportunities out there up and down the country. Your job is to find out what works well for you, which strategy you enjoy, and then go out there and deploy it, because you can only achieve anything by taking action. By sitting down and making notes, it's not going to get you anywhere. You've got to make sure you go out there and do stuff, because that's when the magic happens. Now, if you're looking at investing in any of the cities that I've shared with you, very importantly, and just to re-emphasize, make sure you research it, make sure you go and visit it, and make sure you go in there with your eyes open and find kind of the hot spots where things work well. Look at what the rental yield is, what the sale prices are, what are the outside external factors there are, so that you know exactly what you're looking for. Now, thanks for watching this video. Please don't forget to subscribe so I can keep you updated on all the new regular great content. If you like the video, click like. Any comments, both in terms of questions or comments in terms of observations, whether you agree or disagree, post it in the comments below. I'll happily respond and answer any of your questions and share my opinion with you. Thanks for watching, and I hope you enjoyed this video. If you have, by the way, make sure you click like, subscribe and post a comment, because that tells me that you're engaging and you're finding the content useful. And if you like this video, make sure you check out this video here, because it's the next stage in terms of your learning and development.